Good evening, ladies and gentlemen. Murli here. I'm an anesthetist at Apollo Hospitals in Bangalore. And what brings us here on this platform is the need to understand more about money. And as doctors, it's very important that we understand what money is, what wealth is, and finally, how does it lead to happiness? And to discuss more about this, we have our personal CFO, as he's called, Deeraj Shetty. And to introduce Deeraj, it's actually quite a very interesting CV. He's been in many countries, starting from Bahrain, then Dubai, then US, then back to Dubai, and then I think Singapore, if I'm not mistaken. A professional tennis player who went to the US on a scholarship, trained, played for the country, and later did majors in finance and international business from Florida, and then later moved back to India to help people grow their wealth and have a better life. Is that right, Deeraj?
Doc, thank you so much. Beautiful introduction. That much is not what I was expecting at all. For the most part, former tennis player or just a family filled with athletes and a love for sport, and a family that's been in and around money in the Middle East and in India now for the last 4 decades.
So I see that you're already managing many famous cricketers and COOs, and you manage their finance, and you probably have assets under management which totals up to close to 800 crores. Is that right?
Now, the journey over the past decade has been incredible, to say the least. God's been very, very kind. So it didn't start this way. The fundamental reason or the thought behind setting up a financial planning and a retirement advisory firm was because my parents spent about 3 decades in the Middle East. And even though being an investment banker, after 3 decades in the Middle East, when it came towards his retirement, there was chaos, right? And when I went and met those families in Bahrain, this is possibly in 2010 when I was in Singapore, that's when this bulb kind of popped. So it was an internal need, which then kind of led to things after that. So the journey from Singapore to Bangalore happened in 2011, and financial planning and wealth management at TCS and Schneider Electric. We used to run financial planning and wealth management seminars. That is how our journey began in 2011. But as they say, history repeats itself. So being an athlete in India, I got connected to a few athletes. And today, between cricketers and a few tennis players, we've been blessed.
That's a lovely story, actually. So this evening, we have doctors who are joined in from various hospitals, mainly anesthetists, and they probably range from the age group of post MD, which is around anything between 27 to 30, to also senior consultants, right? Heads of the departments. So what we are expecting is initially a small talk from you as to what money is, how do we handle money, what do we do with it? Because as even the Upanishads tell us, we need to have the dharma of how to handle money before money reaches us. So I think having the Saraswati of handling money is important before Lakshmi actually enters life. So I think what you're going to be doing is giving us the knowledge on what money is all about and how should we handle money, how should we kind of go about, investing or saving, and why is it so important? So over to you. And once you're finished with your talk, probably we'll take the questions and take it forward.
Done. Thank you so much, Doc, once again. Good evening to everybody here. Thank you for being in on a Wednesday evening. I'm sure all of you are probably getting out of a hospital or getting into a car. So from that perspective, I'm going to try and make it a little bit livelier. Money cannot be too lively, but I'm going to try, right? And what we want to achieve here at the end of this half an hour, 1 hour, 1.5 hours, however long it is just to leave today with a feeling that money is not our enemy. Let me repeat that. Money on the 7th of August, 2024. And I'm so glad we're doing this. So before I get into money management, you brought up Upanishads and you brought up and Saraswati, right? So if you know, Doc, tomorrow is 888. It happens once in our lifetime. 8 is the sign of infinity, right? It is also the biggest day to manifest. So if we are ending the 7th of August, and please, everybody on this call, read up on energies, right? And that's what tomorrow is about. So I'm just grateful that on the 7th of August, 2024, we get to talk about money, manifestation, and our relationship with money as individuals and as a family, right? So, good evening, everyone. I'm Deeraj Shetty. From my team here, I have Alka Goyal and I have Lakshmi as well. We are SEBI registered investment advisors, and our only focus or our predominant focus is to share information and to build knowledge. I started today evening with the reason I set up the business or we set up the business because it was a need from my home. I am today sitting in front of you because my wife's family, my brother-in-law, my father-in-law, they are all surgeons themselves. So I have seen in my own house an individual surgeon spend 30 years in the Middle East away from his family and home in Dubai with Asta in order to provide for their family, in order to give a better life, sometimes not just for themselves and their immediate family, but parents and siblings involved, right? So the fact that I'm speaking to doctors today in something like this is incredible for me. We do have clients that we work with as doctors, but I've never had an opportunity like this. So I'm grateful to be here today. And what I'm going to talk to you about is my relationship with money, right? Money to me has been a pure enabler. What I mean by that is at a very young age, my dad told me, like everybody's dad told us, that even if you're a janitor, you be the best janitor, and there will be people who will pay for your service, right? It's the same with a doctor, it's the same with a surgeon, it's the same with an advisor. We begin this journey by telling ourselves that we can manage money ourselves. And I want each of us on this call to take just 2 seconds, shut your eyes, and genuinely tell yourself that I can manage money. Everyone, can I request you, maybe Dr. Murli, can I start with you? Right?
Yeah.
Just close your eyes for 3 seconds and repeat in your head very, very clearly, right? I can manage money. Repeat that 3 times. All of you, please, everybody here. And I say this because all of you all have possibly had a very long day. So it's a good, before we get into today's topic of money, which is heavy, I want us to take 5 seconds for ourselves. Because in today's world, we seldom have the opportunity to take time for ourselves. Close your eyes and tell yourself, I can manage money. All right, perfect. Thank you. Thank you all. Alka, can I request you to please share your screen and the PPT? And with this, I will get started with today.
Is the screen visible to everyone? Deeraj, can you see the screen?
I can see the screen, but you can just increase it.
Yeah, we can see the screen, Alka, but we need to, you can switch off the camera, I think, because it's kind of overlapping.
Yeah. Can you switch off your camera?
Just a second.
Yeah.
Yeah, that's better.
Perfect. Done. Financial freedom. Can anyone type on the box in here, what does financial freedom mean to them? What is financial freedom to you? Anyone? All right. If everyone's driving, I'm going to try and talk about what financial freedom is to me. Financial freedom to me is taking holidays when I want to. Financial freedom to me is spending that Friday evening, maybe once in 6 months, with my kids completely unplanned. Financial freedom to me is when I get a call from mom and dad, I am able to be there to assist them. That to me is financial freedom. And my relationship with money or my journey with money is what I want to move this next slide towards and start the Alka? Or 1 second, Alka, I'll just share the screen.
Is it visible, Deeraj? Is the screen visible?
It's visible, yeah, but I think Dheeraj is sharing it correctly, yeah.
Okay, fine.
Is this visible to everyone now?
Yeah, it is.
Okay, perfect. So the journey that I'm going to go today is because I have first-hand experience with a father-in-law and 4 brother-in-laws as surgeons, right? When Doc reached out to me, when Dr. Murli reached out to me, the first thing I did is ask a set of 25 questions to these doctors. Or can I say surgeons? These are surgeons in the Middle East, surgeons in Bangalore, as well as in Bangalore. And fundamentally, what we spoke about, or what they all spoke about, was 6 life cycles or 6 processes in their life as surgeons. One, when they begin their practice, when they actually started their financial practice or doctor's practice and when money started coming in. When there was income, there was expenses that went out of that income. And after MBBS and after MD and possibly setting everything up, there were loans which were incurred. Once we went through this journey, we then wanted to become more established. How did we do that? By anchoring ourselves with a brand new home in this city. By upgrading that car, telling ourselves that I am here now being a consultant in this industry. And as money increased, I had to travel more. We all traveled more, right? Why? Because we always thought money will continue. What happens then? All of a sudden, everyone says, wait, get married and have kids. We didn't think of those expenses initially, did we? And all of a sudden now, our parents who were our heroes, our parents who actually took care of us financially, all of a sudden needed our support. That never happened for the first 35 years. Once that was done, we finally started building assets because kids came about. Parents started getting old. We really need to start investing. Now, where do we begin? We begin with what we are familiar with. And what is that? The bank that we've had a relationship for 30 years. Our parents had that relationship. And as our parents bought the LIC policies, and as our parents bought real estate, we tried to do that as well. In fact, at one point when we started earning money, we were sold insurance policies and LIC policies, not in the name of investments, but in the name of tax saving. So this is how all of a sudden now we reach the stage 5 where our children are about to get to college. And our parents are now going through surgeries. We didn't think of all of this because we were still focused on our career. My brother-in-law went to Shema, then he went to Korea, then he went to the Middle East, and then he came back to Bangalore, and then he practiced in Bangalore. Why? Because we need something to build. And that's where we realized that when you come to the last stage, what do we end up doing? Again, we will invest in land, we will invest in the apartment, and we will buy these pension policies because we want fixed income. Right? This is the journey or the stage of the 6 to 8 doctors that I spoke to. And this is what they mentioned was our reality. And I said, okay. And that's when they said, but nobody teaches anything about this. And I said, great, since I'm speaking to doctors, I'm going to try and correlate this. So I asked them, if you know that these are the stages or this is what is happening, what are the challenges as a consultant you all are facing? Right? And surprisingly, the first thing that came out of all of them was actually time, not knowledge. Was a lack of time between surgeries, between patients, between different practices, children, and then family and friends who call for free consultations, right? There is no time. And in this, you want me to worry about my income, my expenses, savings, investments, real estate, taxation? Come on. I'm trying to focus on my patient and the surgery in the morning. Then it came to Dheeraj, if you open up a newspaper, you will hear this person lost money in stocks. This person was cheated in a real estate deal. Some banker has sold mutual funds. Every 6 months or 1 year, he comes and he asks me to change these mutual funds. Third, how do I trust the right person? And third, how do I build trust with multiple people? Because obviously, somebody who is talking about mutual funds cannot be an expert in tax planning. Somebody who is an expert in real estate cannot be an expert or may not have the experience of the life of what a surgeon or a consultant is. Now, there are disconnects here, right? And that's, we realized quid or the solution can be much, much, much simpler. And the focus here was, let's break it down into 3 very simple takeaways for everybody here today. And what I'm going to do, or what Alka, me, and Lakshmi will do by the end of today, is even share 2 images with you all that I believe should help or give you all a good structure and at least a blueprint to begin this journey with. Right? Tomorrow, when a banker, when a family friend, when an insurance agent, when a real estate agent speaks to you, at least you know what questions to ask, or you know where these products can and may not fit you. Right? So what now, the 3 things we broke it down were wealth protection, wealth creation, and wealth management. Dr. Murli, before I move on, any feedback on the pace? Any questions that have come up? Anything from your end at all?
Well, I can see that there's nothing in the chat box as of now. I think it might come up later. And with regards to pace and the visibility of the presentation, we're all good. You can carry on.
And how much time do I have before Q&A?
There's no time limit. We just continue.
Okay, perfect. Done. So can I ask you, Dr. Murli, in your mind, what could wealth protection and versus wealth creation, what could wealth protection be?
See, as you already mentioned, the life cycle of a doctor, especially ones who kind of become consultants, it's compared to other specialities or other professions, we are a little late bloomers, you can call, right? So we start earning late. So when it comes to what we earn now, wealth, as you probably have kind of probably explained in the next few slides, is not just money, right? It's other kinds of wealth too. It could be real estate. It could be. I am a little holistic in that kind of thinking that even friends and family are also a big wealth. So protecting that also is more important. So wealth protection is about what you earn and how you are going to protect so that it doesn't, I would say, erode away. Right? That's a better word. And wealth creation is to see how what we have protected grows in the right way and beats inflation, if that is what you had in mind. And probably management is, as you rightly said, we don't have enough time. And I'm sure many of us who are here are probably thinking of tomorrow's surgical lists and probably are getting messages as I'm getting from various juniors or from the hospital as to what's happening. So time is something which we don't have. So wealth management is where we need to kind of think of how to manage the finances and make the entire creation and protection work properly. So that's my take on it.
Perfect. Great. I feel like you've just taken away my entire presentation, Doug. Right? So I think so you're spot on. what I've tried to do here, which we will share, like I mentioned at the end of today as well, is break down wealth protection. We forget about protecting what we already have. We only chase what we don't have. What I mean by that is when we have an FD, savings account, an LIC policy, maybe our first apartment, we never think of writing a will because we feel we will live till we are 100. Number two, we feel my children will never fight, or I don't have enough to write a will, right? That's to us, that's one form of protection as well. But what we are talking about here is how do we protect our financial assets and how do we protect our retirement? We protect our family, financial assets, children, and their future with what is called a pure term insurance. A term insurance is a life insurance where the benefit only goes to the family members if there is a demise or disability. This protects in the long term. As we grow older, have we heard of families selling property for a medical emergency? Because we have not protected our health insurance. Today, we are all protected by our hospitals, and doctors have a code where OPDs are not charged amongst each other. But surgeries in old age, I'm sorry, that's not going to be covered. Then we protect our retirement by creating government-backed secure and fixed asset with a PF or a PPF or a National Pension Scheme, NPS. Because these are government-backed, we have security, we have consistency, and we have dependability. We go from there, and as a family, we have children, we have expenses, we have EMIs, right? And that's what we've tried to highlight for all of you here. A screenshot here will also help you all for life. How much term insurance should I get? My salary today, Dr. Murli, you mentioned is 40 lakh. I mean, you said it's between 40 lakh rupees, 10x of that. Minimum 5x is what you cover, and you go up to 10x because God forbid something does happen. If there is a home EMI, our children's expenses for the next 15 to 20 years. And if I have a consulting practice as well, then that practice my wife or my surviving spouse will not be forced to sell. Somebody else can partner in there. A term insurance protects the family. A health insurance you buy today to protect for your retirement. Your PF, PPF, NPF, husband, wife, children, 1 to 1.5 lakhs per year. I am not talking tax saving. 1 to 1.5 tax per year, 1 to 1.5 lakhs per year per PAN card will create a lifelong pension for the entire family. And then household EMIs, household expenses, children's fees coming up, the holidays coming up. All of this is money that cannot be invested. They should be put aside for savings. And these savings are in our FDs. These savings are in something called liquid funds and arbitrage funds. This, for a family, begins the journey of personal finance. Once this is in place with somebody like me, wife, 2 children, when I have this in place, whatever we do from here on, my family is secure. My family is protected. I lose my job, no problem. I have a disability, my family is protected. Whatever happens, I'm secure, my retirement secure. With this in place, we then move on to our next journey of wealth creation. Because we can only create money where there is volatility. With wealth creation comes market volatility. And why market volatility? For multiple reasons. Multiple reasons. One, because inflation is very, very high. Can anybody here tell me what healthcare inflation would currently be in India? Anyone here?
I know most of you are probably relaxing at home listening to the talk, but you can just type in a number probably so that Dheeraj gets an estimate of the idea of inflation that we all have. We have got 15% from Dr. Vaishali, 10 to 15%, Dr. Shishir. So the numbers are coming in. So let's see.
Yeah, thank you. This is always a matter of 2 or 3 people starting, and then genuinely, because when we look at our household numbers,
So
we will know it
20%,
ourselves.
20%, 10%. So these are the numbers coming in.
Perfect. So healthcare inflation, like education inflation, is the highest in India. It's between 14 to 15% per year. So a lot of doctors here was spot on.
Are we giving any prizes away, Dheeraj? Because we got Dr. Dheeraj and Dr. Vaishali getting it right.
Done.
Shishir, Dr. Shishir and Vaishali getting it right.
I will make a note of this for Dr. Shishir and for Dr. Vaishali. Alka, I and Lakshmi will think of something and get back to you 100%.
Yeah.
Then I'm going to ask a few more questions along the evening as well. Right? So what I brought up here was, why is wealth creation important? Wealth creation is important because we need to beat inflation, this exact number. Inflation is a concept where the value of my money comes down year on year. Right? If I could buy a car for 20 lakhs 5 years ago, that same car today is worth about 30 lakhs. Right? The house that I wanted to buy 5 years ago was 1.5 crores, or 2 crores. The house I'm looking to buy today is about 3.5 crores. The same house. Right? That is inflation. Now, before I come to inflation, we were all here for money. So who here knows something called a fire number? One second, let me mark this more interesting. Okay, cool.
Okay, we'll probably give 10 seconds more because there is no answers coming in. Probably you need to explain.
Okay. Fire number FIRE. Financial independence to retire early. Financial independence to retire early. What does that mean? This number tells me or gives me an idea of what is the amount I need to have as a corpus, or what should I aim towards. For example, if I have 50 lakh rupees, or if my monthly expenses, my yearly expenses are 50 lakh rupees, I divide 50 lakh rupees by 4%, and I come to my fire number. I'm going to open up an Excel and share this here. One second. I'm going to get to.
Or if you're finding it difficult, we'll just do the math in our head. Oh, you got it. Okay.
I got it. Right. So if my monthly expenses are 50, if my yearly expenses are 50 lakh rupees as a family, how much would I need in order to retire? The approximate amount I would require is 50 lakhs divided by 4%, which is 12 crores 50 lakhs. Sounds like a very large number, but by the end of today, you're gonna realize, we are all going to realize our true potential. Now, I have added something over here for 3% as well. What is that? The reason I have done that is because of a concept called inflation. Because today, if I require 50 lakh rupees, in a few years, that amount will increase, right? So that's why I am going to divide here the 50 lakhs by 3%, and that's 16.75 crores. Now, if I have 16.75 crores, as a family, I will have 50 lakhs inflation adjusted to live and retire. Going to come back now to the presentation. That is what my fire number is. Now, once we understand what our fire number is as a family, we come to understanding this concept of expenses doubling every 9 years. Wow. This is exactly the concept of inflation. Because of inflation, every 9 years, our expenses double. Today, as a family, if I require 50 lakh, if I require 1 lakh rupee a month, in 9 years, I will require 2 lakh rupees a month to live the same life. In 18 years, I will require 3 lakh rupees to live the same life. Because of inflation, it's very important for us to understand the concept of saving and investing. Doctors, saving is what we do predominantly. Saving is fixed assets, fixed income, guaranteed returns, because we want to save money. It could be in our savings account, current account, fixed deposits, corporate deposits, LIC policy, PF, PPF. All of these are assets which come under saving. Now, why do they come under saving? Because they do not help in covering the point above, which is inflation. Saving, which is fixed and guaranteed, does not beat inflation. Hence, saving money in the long term is equal to losing value. That is why from saving, a certain amount of ours needs to move towards investing. Any questions here? No?
I think you've been very clear.
Okay. So investing is high risk, market volatility, which also equals long term, right? Only when we are invested in markets or only when we are invested in land will we beat inflation. Apartments also do not beat inflation.
Dheeraj, can you just
Right?
explain that when you said apartments do not beat inflation? Because that might have come as a surprise to many. Yeah.
So today, I buy an apartment for 2 crores. I possibly pay 50 lakh rupees upfront and I take a loan for 1.5 crores. I give that 2 crore apartment out on rent. I possibly earn on average 3% on the 2 crores, which is about 55,000 rupees a month of rent. On this, I will pay taxes. But my interest is anywhere between 8.5 to 9.5%. But my rental return is at 3.5%. So fundamentally, we lose value there. There is a value that people speak in appreciation of the apartments, but that appreciation in an apartment comes once in a 8-year time horizon. The apartment will remain stagnant for 5, 6, 7 years. And then at one go, because of some market circumstances, it will change. And that's why I'll also come in later on in this conversation. We'll speak about something called buying an apartment, the cost of buying an apartment and living in it, and the cost of renting or buying versus renting. Right? So Sorry, did that make any sense at all?
Yeah, it made sense. So the appreciation that you get through the apartment is not going to beat inflation all the time, unless you're in that 8-year cycle.
Yes. And in that 8-year cycle, please remember, doctor, you have paid 8 years of EMIs as well.
Yeah.
So the cost was not that 2 crore rupees. By the time we have paid off the apartment in 25 years or in 20 years, the cost of that apartment is more than 3.25 crores.
Yeah.
The purchase cost is more than 3.25 crores.
Yeah.
Right? So the concept of, sorry. So with that, I'm going to come back to the fixed income, PF, PPF, NPS, FDs, which are savings, guaranteed, consistent, and investments, which are more volatile. Now, with volatility, or how do we protect our family from this volatility? We protect our family from market volatility, market instability, government factors, war factors, international factors. We can avoid all of these by investing for more than 7 years. When we remain invested in financial markets for more than 7 years, we go through this exact cycle that I mentioned in real estate just now. That also happens in markets, equity markets. Every 7 to 9 years, you will have one market correction of more than 25 to 30%. It's a guarantee. Right? So how do you, in this process, still make money? You make money by remaining invested for and completing the 7 years.
So Dheeraj,
And
I'll just interrupt you. Sorry. Now there is a misconception, especially amongst many doctors, that investing in the market is risky. Now, when we say market, it is shares, and when we talk about shares, I am still reminded of a Jaspal Bhatti's very nice comedy which came out 30 years ago about how he sells an IP of a pani puri stall. So shares, I think, as you probably will explain later, is nothing but a share in the company. And I think what you mentioned about beating the risk by staying invested is something I want everybody to take home, because there is a risk, as you mentioned, but you can avoid that risk by staying invested.
that's correct. Now, equity is, like you mentioned, buying a part of a company, right? Now, that can be with Apollo hospitals, that can be with Narayana Hospital, that can be with Aster Hospital, right? These are options of just hospitals. We don't even go down that route. In fact, there is no need. If we eliminate this market noise, if we eliminate the newspapers, if we eliminate the fund manager who is selling the latest stock, buy this and it will double in 1 year, buy this and expect 30% returns in 6 months, right? All of this can be avoided. In fact, most clients that we work with, and me personally, right? We don't even get involved in all of that. Unless you are walking into your house and you are seeing which atta you and all of your neighbors are using. If it is from a similar company, why not? If all of y'all in your neighborhood and your office space are using the same technology product, I don't consider that a bad buy. Why do we need a third party in Indore and Nagpur and Patiala and or Sadashiv Nagar, Bangalore, to tell us what to buy of a company in Rajkot? Why? Which cars do you see on the road most? You want to get into automobiles, right? Which cars do we see in India the most? Simple answers, right? These are ways we can eliminate this market noise. In fact, Kaushik Ramachandran, the founder of Dyoita Solutions, right? They came out with a proprietary algorithm many, many years ago of creating index funds and creating a retirement solution. People laughed at that point in time. Today, this man has hundreds of crores of assets under advice, right? He has followed a very simple and straightforward strategy to build long-term wealth for a family. You want to enter markets first time in your life, there is something called the Nifty 50, which is the top companies of India. Buy that. You have a little bit excess money after that. There is something called the Nifty Next 50, right? Which is the 51 to the 100th company in India. We don't have the time to do research. We do not want to follow some WhatsApp forward to buy a stock or listen to ET Money to buy a stock or any of these DIY platforms, because today there is a recommendation for one stock and one mutual fund. Next week, there is a recommendation for a different stock. Now, as a consultant, when you then get your incentive at one time of the month, it is a different recommendation. When you get that consulting income coming in, it is a different recommendation. Now everybody is confused what to do, right? Don't do that. Markets are made up of top 200 companies or 250 companies in India, right? Let's take exposure to all of them. Why? Because India today is at the cusp of our growth. And if we believe in India as a future, why should we look at some business in Jharkhand or look at some big conglomerate in India whose promoter today has health issues or whose promoting management team has compliance concerns? Why do you want to bet with that? In fact, why do you want to bet with a stockbroker or Deeraj Shetty? Because tomorrow driving back home, somebody may bang them. Or why even listen to a mutual fund advisor? Because every year there is some mutual fund advisor, some mutual fund asset manager who is getting into trouble for insider trading, right? Eliminate all of this for the family. There are indexes, large cap, index mid cap, index small cap. Gold is there, silver is there as funds, right? There are government bonds which are available now. After that, we can add liquid funds and arbitrage funds for a family and create a beautiful retirement corpus of 5 lakh, of 10 crore rupees, which will give the family more than 50 lakh rupees a month, a year, right? And that's what we are coming to. Because when you invest and with the volatility of the long term, there is something called the power of compounding, which kicks in. Warren Buffett, sorry, Albert Einstein called compound interest as the eighth wonder of the world. And he said, he who understands it earns it, he who doesn't pays it. Now, what is compound interest? Do you want to take a shot here, doctor? Sorry,
Well,
I keep bringing you in.
yeah, I'm the only person you're seeing here. Probably that's the reason.
Yeah.
No, I'm a big fan of compounding, and one of the main things which I tell people as well is that the time is the most important factor in this formula of compounding. And of course, interest definitely plays a role, but it's the number of years you kind of stick in it, because all the curves, all the graphs that are shown generally are the Warren Buffett's earning and how it's only in the last 10 years or 15 years that it has compounded. So you need to be invested for long term. I think that is my answer.
Absolutely. Absolutely. Warren Buffett's net worth grew in the last decade. He has been investing since the age of 11. He is today 90 plus years old. His net worth, the compounding has started after the 30th year. The true compounding, exponential compounding, as they say. But the reason but compounding can only happen when we remain invested in equity markets and do not try to exit, rebalance, restructure, change funds, or buy the best performing stock, or right now change because the best performing fund has changed. Remain invested after doing good research, or let the country of India's indices and the companies that come into this index compound your money. Because in the long term, the markets will grow. And that's what, one second.
I request all of you who are listening in to use the chat box. If you've got any doubts, you can keep writing in.
Yes, please. Because fire number, inflation, power of compounding, and saving versus investing. If we take away even these four factors today, these are good concepts to protect ourselves. These are good concepts to know whenever we are taking an investment decision. Because once we do the wealth protection and we are creating assets here, what becomes very important is our long-term tax planning. There is and when I say tax planning, today we only think of income tax planning from our current income and how to reduce my income tax. What we do not understand, that when we invest in FDs, when we invest in insurances above 5 lakhs, when we invest in stocks or dividends or mutual funds, there is a tax there is an investment tax as well. So there is income tax and there is investment tax. These are two very different concepts. So understanding this and structuring it is what then leads to wealth management.
Deeraj,
Yes.
Deeraj, Dr. Shishi has just posted one question. So his question is, I read somewhere that the index typically grows about twice that of the nation's GDP. Is that true?
Dr. Shishi, that's a great question. Index fund, I don't know if it is twice that of the nation's GDP, but if we look at Indian markets have historically given us at least anywhere between 11 to 12%, doctor, right? So is it somewhere in that range? Yes, it's possibly somewhere in that range. But another way of answering this question is in the long term, not year on year, doctor, but in the long term, over a 5-7 year time horizon, the index will definitely beat inflation by 3 to 4%. And it will definitely be at least 1.5 times that of the nation's GDP. I hope I've answered that, Dr. Shishi.
Yeah, I guess you can
I'll
continue,
take that.
Dheeraj. Yeah.
I'll take that as a
It's-
yes.
yes.
I'll take that as a yes. All right. Now we come to the third part of money management, right? Because we have protected our family from any contingency, any emergency. I created some fixed income assets to make sure that my family and my retirement is secure. Post that, I made sure any EMIs, disability, liabilities that come, my family is sorted. Now I then created a little bit of long-term investments. I made investments because I wanted to beat inflation. I made these investments because I did not want to touch them for 15 to 20 years and I wanted them to compound. I made these investments because I had already planned all my short-term, medium-term expenses, right? And once I created all of these assets, I now want to understand how should I manage all of this because there is market volatility. There are multiple assets in the world. It's not just this index that Dheeraj is talking about. What is this index? So there are mass assets to manage. Like what? Gold. Gold is inversely related to Indian markets. When Indian markets are volatile or when they go down, is where gold goes up in value. When there is global war and Indian markets and the world markets are volatile, gold goes up in value. So what does gold and silver act? Gold acts as a hedge to the markets. Another way to hedge against the equity market is to invest in something called Government of India bonds or gilt funds. These gilt funds are backed by the sovereign government of India, right? So like if we think an FD is secure, or if we think a company, a corporate deposit is secure, then a Government of India bond is that much more secure. And after this, in my wealth creation, if I want to create some diversification, so I have created market diversification with gold and silver. I have created equity diversification with government bonds. Now I want to create currency or geography diversification. I want to invest in US markets. Today, there are funds available in India to all of us where we can invest into the US tech funds or just the US overall market, right? So wealth protection, wealth creation, wealth management is how we look to build this for the family. You create the hedge against markets, you create a hedge against currency, and you create a hedge against inflation. When you have the risk protection parameters, the wealth protection parameters and the wealth management parameters together, it will make at least 40% of your debt portfolio, if not higher. Once all of this is done, make sure that we are writing a will. Make sure that all of this is put down on pen and paper. Once you have all of that, and then you want to take market risk because some friends told us to try something new. Our neighbor told us that they invest in futures and options. Our cousin told us that we should buy this one stock. Our friend who works in a particular industry and who has insider information on something else will ask us to buy something else. We believe you get into this risk capital after you have prepared everything else. Because as Benjamin Franklin says, by failing to prepare, you are preparing to fail. This is when you will hear families saying, markets are volatile. I lost a lot of money. I was unable to send for education. During the marriage, there was a lot of market issues. All of that you will never hear when there is a wealth protection bucket, a wealth creation bucket, and a wealth management bucket, doctors. And to that, if I add land and commercial, I can break down my overall asset. This is another screenshot that everyone can share, can take and share possibly with everyone. Yeah. So with this, these are three aspects we try and talk to most, at least when I was talking to these 6 to 8 individuals now, just before 6 to 8 consultant surgeons now, this is what I try to kind of talk to them about as well. So I'm going to leave this, Dr. Murli, with you as well. You can share it with the others in case questions come up. And so I started asking them, what's causing all of these issues? And what they came to me with is, one, Dheeraj, there's so much happening between life, children, work, and pressure at work that there's too much emotions happening. On top of that, you're talking about market volatility. I don't want to get involved in this. I have enough stress on my plate. On top of that, I'm a consultant, Dheeraj. I ain't asking anybody for help. Because in my world, people come to me for help. I have the answers. All of a sudden, you are telling me that I need to ask help. I'm not used to that. Sorry. So what am I going to do? I'm going to stick to what I know. My uncle said land is great. Let me buy land. My neighbor or my aunt said, you know what? LICs are good. Let's protect ourselves with insurance and retirement guaranteed return. I am going to stick to my biases. I don't care what you're saying about inflation, Dheeraj. I don't care what you're saying about markets, Dheeraj. It is irrelevant to me because I have too much of an ego to even tell you that I don't know. And this is a surgeon of this is a 32-year-old a surgeon with 32 years of experience. Right? So then we said, okay, then how can we make a difference? He said, just talk about 4 things. The earlier you start, even if you start with 20,000 rupees, just start. Because there is a power in starting early. Right? That was one thing he said. The second thing this surgeon mentioned was, Dheeraj, every week one patient will tell me buy land, One patient will tell me he has the best stock. One patient who's a banker will tell me to buy mutual funds. One patient will tell me to invest outside of India in Dubai real estate. One person will tell me do futures and options. My neighbor has told me that he's making amazing money in stockbroking and trading. Right? How do you eliminate this noise, Dheeraj? He's like, can you make simple processes where this noise can be eliminated? Because only when the noise is eliminated will you remove this emotion and fear out of my heart. And you will bring me then to the reality that you're trying to speak of markets and compounding and long term. That can only happen when my emotions are at bay. My emotions will only be at bay, and I will only be able to compound my money if I delay any kind of gratification that I'm looking for. It's like these are the four, like Dheeraj, you can give individuals and families a structure of what to do. But when you're pushed against a wall, you don't know where to start or what you should do. So these are at least a few things that you should be kind of focusing on. And that is with that, I am ending everything for today. I am leaving everything up as a Q&A from now on.
Thanks a lot. Thanks a lot. It's been a wonderful 1 hour, I would say. Yeah, 1 hour, 10,
Yes.
15 minutes of a very nice journey of how we protect, create, grow our wealth, and finally manage it. Thanks a lot. Now, we do have a couple of questions, one from Dr. Prashantars, which says, once you've completed your responsibilities like having a home, children education, to regenerate the wealth, what are the recommended investments in short term? So we are talking here of somebody who has completed a lot of responsibilities in life, and what does he do with the money? How does he make it grow?
The simplest way to answer that, is to go back to the wealth creation bucket. Right? Because see, there are two things here though, doctor. Short term and markets do not go hand in hand. Right? Short term and market involves a lot of risk, a lot of volatility. And if your goals are already covered, maybe you can take a certain amount of risk, right? But that risk also, I can't say if we are closer to retirement, we should be doing futures and options and trading. No, an index becomes a great option even there.
Okay.
Index funds there are families who have earned in a 60-40 portfolio, right? 60 equity, 40% in gold, silver, government bonds, arbitrage funds, right? Will beat inflation by beat inflation by 3 to 5%.
Now,
We will
yeah.
We will lose money when we try to multiply it in the short term.
Because what we saw, Dheeraj, I think that answered Dr. R's question. But one thing which we definitely have seen post-COVID is people realizing that they need an alternate source of income. And many have resorted to investing in the stock market, especially for short term, thinking that they can actually earn an alternate source of income. And what you told is very right, that the risk is very high if we are trying to generate money through the stock market in the short term. And I think that should probably go as a message. There is another, yeah.
That should stop. Sorry.
Yeah.
I will put this out as a disclaimer and a sincere request to stop that practice at the earliest. In fact, SEBI is the main governing body in India. And just last week, SEBI came out with new regulation papers to protect individuals like us who work 10 hours a day to secure our families. Families like us lost 56,000 crores last year in futures and options and stock trading. Only the brokers make money. They will make money for us for 3 months, 6 months, 9 months, and then kaput. And after that, what happens? We start investing more money with them because we need to recover the old loss.
Mm.
In equity markets, in fact, that's another thing maybe Alka and Lakshmi should take away from today. In equity markets, the other thing which is very important to understand is never chase losses or never try to recover losses. As Warren Buffett says, as Rakesh Jhunjhunwala used to say, you have to cut your losses and walk away.
Now,
It's
there is,
like when you're on the operation table, you will try for 2 hours, 3 hours, 4 hours, 7 hours. At some point, there are other people, there are other patients waiting. There are surgeons who can be utilized somewhere else. You know, you have to cut somewhere. You have to cut your losses somewhere.
yeah, I think that's a good message actually, which everybody probably needs to take away from here. Now, there's another comment from Dr. Sishir, who talks about, the relic of our socialist past, and money often looked on as a dirty word, especially in medicine. So people don't get to talk about it, and we tend to kind of hide behind this curtain saying that, yes, we are doing great work to the society, and therefore we shouldn't talk about money. So that's a good point, actually, that Shishir has brought out. Thanks, Shishir. Thanks a lot. Dr. Vaishali has got a point or a question here as to which is better, gold bonds versus infrastructure bonds. And the second question is investing in real estate, of course, for rental income, which already you have covered, saying it doesn't make much sense, or investing in agricultural land. So the first question is gold bonds versus infrastructure bonds.
In fact, before I come to Dr. Vaishali, I'm just going to go back to Dr. Shishir real quick.
Yeah.
It's a great point. I don't know if it is just in medicine. As Indians, I feel we were taught either in our schooling system or at home. We were never taught about money. We were never taught about managing money. In fact, the topic of money was something that was not spoken about. It was taboo for kids. If you spoke about money, it meant you didn't have any. Whereas globally, you speak about money because you want to talk to them and tell them about how to manage it. So from that perspective, you're absolutely right, Dr. Shishir. But what I'm slowly trying to do now, especially after I spoke to these, after Dr. Murli reached out to me and I spoke to these 6 brother-in-laws and family members, surgeons of mine, is I think it's that much more my duty now in the next 3 to 5 years to reach out to more than, I would say, 1,000 doctors in, at least if I can do anything, I would say in just Mangalore, because I know I can at least try there. Because it's important to speak about money. And as doctors, I see this a lot because there is a hospital which is run as well, are mistreated today as well, unfortunately. Not like earlier, right? The flack that doctors get is very unnecessary. Very unnecessary. So there is a line which needs to be drawn. And that can be drawn when we take ownership and onus on a few things ourselves. Forget about perception of others. We are not talking about money because we are cheating somebody. We're talking about money because of our time, expertise, infrastructure, and solution providing. Right? We are today moving from a socialist economy to a capitalist economy. We are, because we're moving from a developing country to a developed country. We all have to make those. In fact, lawyers and doctors are both going through this cusp in India today. It's very similar today. No? So, that great point there, Shashi. Now, coming back to Dr. Vaishali, gold bonds or infrastructure bonds. If I'm doing infrastructure in India, can I not pick the best infrastructure company in India? Why do I need the bond? My PF, my PPF, my FD is already enough and more bonds that I have. But gold, on the other hand, Dr. Vaishal, gold is great, right? Gold is a great market. Gold is a great hedge to equity markets. Gold also grows anywhere between 8, 9, 9.5% year on year, if you take an average. So instead of a fixed income, definitely look at gold. And sovereign gold bonds may stop soon by the government. So please look at gold funds or gold ETFs. Gold ETFs are very cheap to handle, are very cheap to manage. You don't need to buy and store it somewhere. So I would definitely look at gold. Investing in real estate for rental income, no, ma'am, not at all. I would say take that entire lump sum, put it in this gold bond or infrastructure bond, you'll have a better yield, ma'am. You should rather do that, because then tomorrow, if you are changing your cities in your retired life, or if you want to transfer the money to your children, or there is a health issue and you need to give it to some family member, you have the money in your bank account. You don't need to go to some broker and wait for 6 months, 9 months to sell it, and then negotiate with some third party, and then he'll say, I'll give you this, I'll give you that, then I'll give you cash. And then in your old age, what are you going to do, doctor, with that cash? Then you'll have palpitations and health issues because there is cash.
Now, Dheeraj, just to clarify, for people who are listening, gold investment means buying it in the paper form, not in the physical form, right? Because I just want to clarify this. Holding on to, say, a gold bar or something is not what we are talking about. We are talking about investing in the gold price and a gold ETF
Yes.
or a gold, gold bees or whatever it is called, right? So
Yes,
it is
that's correct.
investing in the concept of the gold, not in the physical gold.
Yes. So India came out with sovereign gold bonds. The Indian government came out with sovereign gold bonds a few years ago, right? Now, sovereign gold bonds is where you do not get to keep the physical bond. You will invest in bond in the gold at a certain price. It will be invested for 7 years. You will get, at the end of the 7 years, you will get the growth of gold. In the interim, you will also earn 2.5% tax free. So 2.5% tax free is more than what you are earning in your savings bank account at 4% if you're a 30% tax bracket. Plus, gold grows at anywhere between 8.5 to 9% year on year. So you have both those advantages coming in for you. So not physical gold, but paper gold. Definitely.
So Dheeraj, just to kind of, we have been kind of an hour and a half, and I don't want to take much of your time or all the doctors who joined in. So I have a pretty difficult question for you. How do
Yeah.
you buy happiness with the wealth that you've created?
Honestly, it's not a difficult question. Happiness is a state of mind. Happiness comes by having information in on our fingertips. Happiness comes by protecting ourselves with the right group of people around us. Happiness comes from having childhood friends or even family across. Happiness is multidimensional. Just money is not. The richest people in the world are not happy. Right? The richest people in the world barely have their families are struggling to be together. Money is an enabler. Your relationship with money, knowing your fire number, knowing that you're able to meet your growing expenses of inflation by investing and beating inflation, and having that peace is what allows you to focus on your practice, is what allows you to pick up golf or teaching or help others, right? Know your numbers, have the assets aligned in order to do it, and have the right team around you. And Dr. Anant actually said, choose a trustworthy financial advisor. Trustworthy and financial advisors are a dichotomy. Why?
It's actually Dr. Kumar Swamy, who is our team lead. So
Oh,
so I think he has put it on purpose, that we need to find a trustworthy financial advisor. So that's the first biggest task here. So
it is. It is. And I'll tell you why, right? So when we are looking at when we are trying to look for a financial advisor, Dr. Kumar Swamy, the few things we tell individuals is, one, what is their education level and what is their experience levels? Number one. Number two, are they even registered by SEBI to give you advice? Or under the pretext of a bank or an insurance company or a mutual fund distributor, they are selling you something. Third, what is the revenue model of this financial advisor? Are they saying, doctor, you are so famous, you are such a big doctor, such a noble profession, I will not charge you any money. But from every product I sell you, I will take a commission. You just will not know. So third is, what is the business model? Fourth, what kind of team do they have? Because only if you have like-minded kind of clientele will you be able to provide a holistic advice, because you will understand us better. Right? And five, what is the financial situation of that advisor? That advisor is advising you on you as a surgeon managing 40 lakhs, 80 lakhs, 1 crore, 2 crores, but they're earning 20 lakh rupees, 30 lakh rupees, have credit card debt, uh, home loan, education loan, bike loan, right? So these are the 5 factors: experience and education. Are they compliant? Are they certified to do this? What is their team and their clientele? What is their business model? And what is their financial situation? 5 ways to choose a financial advisor. Dr. Kumar Swamy.
that's
Trusted, trusted is time.
Yeah. Dheeraj, it's been a wonderful an hour and 40 minutes, I would say. Yes, an hour and 35, 40 minutes. Uh, I would like to thank you for sparing your time and taking us through very slowly, and also mentioning the importance of infinity and the speciality about tomorrow's date, and how it's important to think positive in this world which is filled with negativity. So thanks a lot for taking all the doctors who joined here. And I'm sure once we share it to the wider audience on probably YouTube, LinkedIn, and other places, we'll have more discussions happening online. So I would like to thank all the doctors who joined in here as well. I know a lot of senior people have joined us today, and thank them for their time. So hope to catch up with you probably in person with a bigger doctor gathering so that people can connect with you in person and network better. Thanks a lot.
Dr. Murli, thank you so much for the opportunity. I would like to thank Dr. Gayatri Shashikumar for introducing the two of us, and all of the doctors here for taking the time out on a Wednesday, either at the hospital, at home, or on your way back home on a Wednesday. If there are topics that we did not cover, I'll be happy to answer them. If there were topics which we did not understand or would require some additional clarity on, I will be happy to explain that in more detail. I'm sure Dr. Murli has all our details. So if there's any questions, please reach out to us just from a Q&A perspective. And what I will also do, Doctor, by tomorrow morning, I'll share an email with you with these 2 to 3 images that you can share with everyone as well.
Sure. Thanks a lot. Huh?
Thank you so much and have a wonderful evening.
Yeah, thank you. Same there. Good night.
Good night.
Thank you. Thank you. Bye.